Kris Krohn here, and we're back again on the best markets to invest in. And today we're talking about one of my favorites. We're talking about Florida. And what makes Florida such a great, unique market to invest in? You get to find out right now. If you could wave your magic wand and invest anywhere in the United States and you wanted to know, Kris, I want to know the best markets in America to invest in. Today we're going to talk about one of those markets. It is Florida, specifically Orlando. Now I want to tell you something about this area. The metropolitan area of Orlando has 2.3 million people. And this is home, this is like the world capital for theme parks. 68 million visitors a year. You got 100 lakes in the area. So Forbes has actually called this one of the top 3 markets in all of America to invest in. And I've been hunched in there for the last few years helping my clients buy real estate. This is one of my, what I call equity growth markets. I'm here, yes, because of the cash flow is actually extraordinarily good. But more than that, and the reason why that I buy my personal properties there is because this is what's called an equity growth market. Homes before the crash used to be selling for $250,000 that we're still getting today for under $150,000. And now guess what's happened? There's been a crunch, the population's been growing, we've run out of inventory, and guess what has to happen? It has to move those prices back up. Why? A lot of you might think, well, Kris, is it like the stock market where it goes up and down and there's no rhyme or reason? No, it's not like the stock market. Real estate is driven by supply and demand. It's very simple. You do not have to be an economist to understand the most elemental and basic principles that allow successful investing to work when it comes to real estate. Understand that as long as population is continuing to grow in that particular market in Orlando, Florida, that more people equals more houses. So when we run out of houses, we need to build more. So as long as we keep making babies and as long as we have 60 million visitors a year and as long as people keep moving in, guess what that means for you and I? It means that the prices have to go back up to what? What it costs to build something. You can't build something for less than it costs. I can't go to Home Depot and say, hey, I see that these studs are for $2.16. I'm trying to build a house. I need you to give them to me for $1.50. That's not possible. It's a commodity. And the commodities of building and contracting ultimately dictate what the value is. So we're seeing a huge comeback in real estate right now because we have the population that's been swelling and saying, build me houses, build me houses, build me houses. For all those reasons, I'm sitting and hunkered down in Orlando, not forever, but yes, for right now. Now, by the way, what does this mean for you? If you're sitting out there and you're like, Kris, I put money in a 401k or IRA and I'm earning 3%, would you like me to show you how you can do 20%? Check it out. Okay, I'm going to pull up on my website some of my properties. I've got a home here. This is a 3-bedroom, 2-bathroom home. Based on this picture, it looks like it's a garage with the side of house. It's built in 2005, right? So this was built just before the 2007 October fallout. And so this was one of those new homes that someone probably built. If we check out the county records, they probably built it for $200,000, $230,000. But this is a 1,252 square foot home. And yes, built in 2005, I'm getting it with my price of what? $132,000. Now, for just a moment, we're just going to do a quick check on a couple of things. Am I below the national median? Yeah, by almost 6 figures. What does that mean? Protection and safety. Because, by the way, will the market correct itself? Yes. When it does, what will happen to rents? They bump up. And is that the right time to sell? No. But if you've bought it strategically like this, it actually still even might be. Real estate moves in cycles. This is the time to be right now in Orlando, Florida. Now I've got a team. My total team is 200 boots on the ground. These individuals that go to the auctions, buy these homes. They're my realtors, they're my networkers, my fixers. All of those individuals are out there supplying homes for me and my clients at these bulk crazy discounts. And on this home, let's look at why I would buy it. My average annual return, 23.3%. Boom! Friends, do you know anything that can do that consistently year in and year out? That's hot. And on top of that, look at this. My average annual cash on cash, 9.45%, almost 10%. So a lot of people are like, Kris, isn't real estate risky? If you don't know what you're doing and you're just buying something in your backyard, real estate can be extremely risky. If you're following my set of rules, then it's way less risky. But if you want to optimize, if you want to maximize, then you go where the real estate's good. You know, people use my lease option system to buy in their backyard, But if you got no money, they'll work with my partnering system, Partner Profits, that you can get here on the website. And I'll show you how to find people with money, show them my deals, put the two together, and guess what you have? You have magic, because we're doing 23% on this property. Now, someone else might be saying, but Kris, that's just a projection. Like, how accurate is that? It's like, is that really likely? Well, the reality is that I've been doing this for the last decade. And that doesn't mean forever, but I started definitely doing it before the height of the market. In fact, I started investing personally in my own real estate portfolio starting in 2003. And I'll tell you that we were making money and skyrocketing when the sky was falling. And people were saying, it's 2007, it's the economic collapse, it's the end of the world. My clients have been making millions of dollars, tens of millions of dollars. Currently, they're making over $700,000 a month just in residual incomes across the board. So that's buying properties like this. And I'm telling you right now, this is a winning property in a winning market, and it's going to work for you really well. Let's take a look at this one. Okay, this, I'm not the biggest fan of the color of this house. It looks kind of brown with a little bit of pink and puce or fuchsia or whatever there's got to be kind of a pussy word that they have for that kind of color. Some of you are looking at it like, Kris, I don't know what you're talking about. That's a really attractive house. Well, it's built in 2010. It is an attractive house. This is a house that came through at the end of the market fallout. This is probably a bank foreclosure from back then that took the banks a couple of years to get off of. This 1,700 square foot house I'm getting for $174,000. And on 4734 Osprey Way, this home is producing an average annual return of 23.82% after all costs are factored. 23.82, are you kidding me? This stuff rocks. And my cash on cash on this, it's a little bit lower. It's 7.49%. But anytime I'm over 5%, I got to tell you, I got a big smile on my face. So these are my metrics, because remember, every week we're piling through thousands of properties to find the winners. And I'm telling you, anyone that gets this property is going to look back and say, wow, I won really, really big time on this. I'm going to do one more, Nate. I want to do one more property on this here. I want to show this 4-bedroom, 2-bathroom home. This is 490 Pepper Mill Circle, Kissimmee, Florida, right below. And this home I can get for $165,000. It's 1,774 square feet, built in 1998. It's attractive, it's nice. Heck, it's got a palm tree in the front yard. If I lived there, I'd love to have a palm tree in the front yard. This is not a lavish home. This is below the median. This is standard of living. This is something that Americans want. It's in a nice neighborhood. 22% annual ROI, 7% annual cash on cash. Friends, when you drill down and you really get into the details of these properties and you look at the volume that we're doing, you're going to find that why would I buy something in my backyard on average for a way lower return than go to one of the highest markets and get some of the best returns? Save lease options for your backyard and come jam with me and invest with my team, and we'll show you how to buy the best real estate in America, and we'll facilitate it for you. We'll find it, we'll fix it, we'll do all these things, charge our typical transaction fees, even less than what the typicals would pay all across the board. We keep it all in-house, and at the end of the day, you get to be the proud owner of a real estate like this. Now, 20% or 22% as we see here, and we start compounding that year over year over year. I'm telling you right now that 20% 5 years from now can start earning into I make 50% or 100% a year on my money. And the moment you double your money, you're doing really, really well on your ROIs. And real estate, it's a long game. 5-10 years to really get somewhere super significant. And if you don't have money to invest, then what you really need is to look into that Partner Profits course. Because I'll tell you, even the deal that I'm doing right now, I'm doing a commercial deal right now. It's a multi-million-dollar deal. I'm not using a penny of my money. But why would a partner want to come with me on that? It's because of what I know up here. It's my experience. It's my vetting process. And the ROI on it is sick, just like we see right here. So friends, get smart about the way you invest. Go to the nation's hottest markets. Have a team step in and make it happen. Because if you got a 401k, you got an IRA out there, you got some basic home equity, and all your investments are averaging over the long haul 3-4%, that's what inflation is, which means you're going nowhere. You've got to be doing 8, 9, 10, 20% to get anywhere and have that compounding really add up to something very, very meaningful. Friends, you heard it here first. Orlando, it's one of the hot markets. And join back for one of my other segments on our nation's hottest markets to invest in. Get in on some of this action. Click the link, talk to me and my team. Learn about how you can get a piece of the action on what's happening in the game of real estate right now. Other than that, make sure that you subscribe, ring the bell, and we'll see you tomorrow.